Okay, welcome everybody to this webinar brought to you by OctaFX, the award-winning forex broker, bringing you some of the lowest spreads in the industry. Today we're going to be talking about automated trading in the forex market, one of the most exciting areas in FX and in the whole world of trading. So without much further ado, let's jump right in. A couple of quick disclaimers. Trading foreign exchange on margin carries a high level of risk and may not be suitable for all investors. You should not invest money that you cannot afford to lose. Secondly, a hypothetical trading disclaimer. The information in this webinar is provided as general market commentary and does not constitute investment advice. So just give you a minute to read that over. Okay, next up, now that we're getting into talking about automated trading, let's just step back and take a broad overview. I think first of all it's important to understand that automated trading accounts for about 75% of all financial market volume. This is according to Reuters. So what you see here in the markets is that the major institutions, the big banks, the hedge funds, proprietary trading firms, they're all now tending to prefer algorithmic trading, automated trading. You'll hear terms like high frequency trading. This is where the markets have kind of moved towards, and I think part of the takeaway here is that if the most elite institutions, the top hedge funds like Citadel, the top investment banks like Goldman Sachs, if these guys are moving towards automated trading, I think it suggests that it's something that serious traders should look into doing also. And now we're going to look at some of the most salient reasons to have a look at this. So here are some of the compelling advantages of automated trading. So first of all, it removes much of the emotion out of the equation. So what you see typically that hurts retail traders the most, retail traders being individuals, private traders like yourself and myself. The big killers of retail traders, and we all know that the majority of retail traders fail. It's a minority that are successful. So the big problems for retail traders are, first of all, leverage is a big killer, and then the second one is emotion. And I'll just stop and talk about that for a minute, because it's the natural human tendencies and our emotions typically work against us in trading. So what you see typically with retail investors is that they will, if they're losing money, if they're in a losing trade, typically they're going to take more risk. And when they're in a winning trade, the natural tendency is to be more conservative. And that's the exact opposite of what you should be doing. And that's a big reason why many small traders fail. So one of the advantages of automated trading is it removes the emotion out of the equation. I think another example that a lot of people can relate to is, let's say you had a big losing trade on dollar yen, something like that. You're going to be more inclined to take greater risk to try and get that money back because you are sort of emotionally scarred by the loss. You see that type of thing happening a lot. And so in automated trading, all of that stuff disappears. It's out of the window. It takes all the emotion out of it. Second important factor is the ability to backtest. You're able to use concrete data, go back in time, test, see how a strategy did over time. So you've got like a really strong reason to exercise whatever strategy, expert advisor that you're using. So you've got the ability to backtest and leverage this technology, which until fairly recently was not available to smaller investors and retail traders. A third important point is that you'll see that when you're using automated trading, it's easier to be more consistent and kind of stick to your plan. So what you see among retail traders a lot is that they may have a great strategy, but it has a couple of losing trades, and then they're afraid to take the next trade, and maybe they don't take it, and then they miss the winning trade. Whereas with a trading system, there's no emotion there. It may have a drawdown, it may have a few losing trades, but it will continue to execute the plan and be consistent. So it's a lot easier to be consistent and stick to the plan if you're using automated trading. Another important advantage is order entry speed. When an order needs to get placed in the market, you're not going to second guess yourself, think about it. When the trading's automated, the order's just going to get fired into the market. And this relates, of course, to what you see in the whole world of high frequency trading, where a lot of the big banks and funds are using algorithmic trading that are firing orders into the market at high speeds, and they take it to such a level where they're co-locating their servers near the exchanges so the orders are fired off even faster. But clearly it's been a very lucrative business for many of the big banks and hedge funds. So order entry speed, another advantage. Diversification and scalability. Now this is a really interesting one. So imagine if you have a strategy that is working. Let's say that in the New Zealand dollar against the US dollar, you found that on the 5-minute time frame, when the MACD crosses the zero line, it creates a profitable signal, and you're making money from that. And you think to yourself, well, why don't it'd be great if I could test this on other markets and trade it on other markets simultaneously. But there's only one of me, so how can I do that? As an individual, you're not really going to be able to do that. You can't scale yourself to trade a strategy across multiple markets effectively. But when you're dealing with automated systems, you are potentially able to do that. So if you find something that is working, you can experiment with it on other markets and be able to trade it multiple markets, multiple time frames, and test it out and see whether it works on other markets. Next one, the ability to trade at all hours. So as humans, of course, we need to sleep, and we're not able to trade 24/7 or 24/5 rather for the forex market. So a trading robot will be able to keep trading at all hours, doesn't get tired, etc., etc. So that's another advantage, and you can exploit. Very often the night session is one of the best sessions. And then it frees you from being in front of the trading screen all the time, which spending a long time in front of the trading screen, not only is it exhausting, it's kind of unhealthy, I think. So it allows you to concentrate on the real work of discovering, identifying a profitable strategy, testing it out, finding that strategy that works, and then just letting it loose on the market instead of being in front of the screen all the time. Moving on, we're going to look at some of the challenges in automated trading. Mechanical failures. Failures do happen. Computers crash. Weird market conditions happen which can throw trading systems off and create strange anomalies. So that's something to be aware of. There is a need for monitoring it. It's usually don't just leave, especially if you've got trading a substantial amount of money, just leave it 100% alone. When I was working at a prop trading firm, we had various trading strategies running, and I actually was just sitting there, what they call piloting the strategy, just making sure it was executing properly, and I was there to switch it off if there were any strange anomalies in the market that threw the whole thing off. Over-optimization, sometimes called curve fitting. There's a tendency, people when they're developing strategies and backtesting them, to keep adding more and more parameters, more and more rules, and it's quite easy to create a strategy that will perform perfectly in the past if you keep adding more and more rules to it. But the more rules you add to it, the less likely it is to actually perform in the future. So this is something to be aware of, and basically the principle is that the more simple the strategy is, really the better, because if it worked well in the past as a simple strategy, it's more likely to work in the future. And then, of course, with all technical things, there is some learning curve. So it's going to take a bit of time up front to figure out how to use everything, and it's a bit harder than just sitting down at the computer and firing off trades. Okay, so let's get into talking about expert advisors in MetaTrader. So this is what allows you to have this automated trading. So expert advisors, trading robots that automatically place trades to enter and exit the market. They use rules that can be described using a series of if-then statements. They also control factors like your position size, the size of the order sent in the market. So of course you're going to need that depending on the size of your account. And in order for the EA to function, you need to leave your computer on unless you're using a virtual private server. So while you're getting up to speed, I think it's fine just to use your computer, but once you get serious about it, I think it behooves you to use a virtual private server, which guarantees almost 100% uptime. So you're not worried about the internet getting cut off or your computer crashing and these kind of things. So most of the serious guys trading, expert advisors with any kind of substantial amount of money, will be using a virtual private server. And the good news is it's very easy to set up and not that expensive, usually between $30 and $45. So next up, more about using expert advisors in MetaTrader. A good starting point is to go to the MetaTrader code base. I've got the URL there, and you can start to take a look at some of the free expert advisors, or EAs, and you can download them directly from there and add them to your MetaTrader 4 platform. So you can download a range of these EAs for free, and then here's what you need to do in order to install the expert advisors. I'm just keeping this written down, so since this webinar is being recorded, you're going to be able to go back and refer to this later if you want to put all this stuff into action. So you're going to want to go to File, Open Data folder, MQL4, the Experts folder, and then copy the EA that you downloaded from wherever into that folder. So it's pretty straightforward, and we're going to go through this once we hop over and look at how everything's done in the MetaTrader 4 platform. You'll need to restart MetaTrader in order for the EA to appear under Expert Advisors in the Navigator window. So just keep that in mind. The next thing, once you've downloaded and added the EA to MetaTrader, in order to activate it, you simply need to drag it onto the chart of the currency pair that you want to use. And in order to make sure that it's going to work, you're going to want to go to Tools, Options, Expert Advisors, and make sure that Allow Automated Trading is checked. Once the EA has been activated, you'll see it in the top right corner of your screen, along with a smiley face. If it's a sad face, that means it's not activated. Next up, let's talk about backtesting. Again, we're going to go through this on the platform, but I just wanted to have this written down so you'll be able to refer to it later and follow the instructions. So in order to get going backtesting, go to the View menu and select Strategy Tester. When you do that, Strategy Tester will pop up in the lower part of the screen. Once the Strategy Tester is open, you're going to be able to select whichever expert advisor you want to test, and then various factors like the time period of the test, like how far back do you want to test it, a week, a month, or a year, and so forth, the time frame of the strategy itself, and then other factors such as the spread that you want to have taken into account. So bear in mind, depending on what instrument you're trading, the spread's going to be different, so you're going to want to factor that into the test so it gives you the most accurate forecast of how good the strategy is and how profitable. And then finally, you just need to press start. The test begins to run, and then within a few seconds or minutes, you'll be able to see a detailed report on the results of the strategy, which will show you key data points such as the profit or loss, the drawdowns, percentage of winning trades, and all that kind of information that helps you gauge whether the strategy is going to be worth exercising, worth using. As an example for today, I pulled up one called the London Breakout Expert Advisor. This is a strategy that I actually talked about in a previous webinar. I think it's a good strategy. It's nice and simple, and so we're going to look at this EA that trades the London session breakout strategy, and the basis of this strategy is that the London session sees a large part of the daily FX trading volume. It's one of the most active sessions, and consequently some of the most important moves take place during this time. And the idea behind the strategy is that the trend direction that you see in the first hours of the London session often dictate the trend through the remainder of the London session, sometimes into the US session. So very often when you do have this breakout, you see a continuation of the trend, and this EA is trying to capitalize that and hop on this overriding trend when it begins to happen. So with that, we're going to jump over into the MetaTrader platform. So I'm just going to hop out of here, and we'll jump into the MetaTrader platform. And quickly also, I'm going to just pull up the code base library just to show you what that looks like and how to download a practice strategy. So we'll do that quickly. So you should see the code base up here now. There it is. Okay, so here you can see a variety of expert advisors that you can experiment with. The one that we're going to look at today is the London breakout strategy. And here you can see all the details of the strategy, the thinking behind it, the parameters, and some of the results. So it's from here that you can download the strategy. So you can just download it as a zip, and you just unzip it and take the file out of there, and that's what you copy and add to MetaTrader. I'm going to walk you through how to do that right now. So now we're going to hop back to the MetaTrader platform. So in order to add a strategy, you go to File, Open Data Folder, MQL4, and then Experts. So once you've downloaded your strategy, your expert advisor, you can just right-click it, copy it, and then paste it into this folder here. So we're going to close out of this now, and once you've done that, you should see the strategy. Once you've done that and you've restarted MetaTrader, you should see your expert advisor here in the navigator pane. If you're not seeing the navigator pane, just go here. You see you can toggle it on and off, and the navigator pane will come up like that. Okay, so they have some strategies preloaded into here. So let's just take a look at an example of how to activate a strategy. So we talked about dragging the strategy onto the chart. So we're going to do that right now, and we're looking at the MACD sample strategy, and this is something that is preloaded on everyone's MetaTrader. And here we can see the inputs, and you can see that you're able to actually change the inputs if you want to here, the take profit, the trailing stop, and so forth. Okay, so now I take this, load it onto here, and we can see that the MACD sample is now active on this chart. Prior to doing this, you want to make sure that you go to Options, Expert Advisors, and make sure that Allow Automated Trading is checked. Something else that you're able to do is toggle the strategy on and off with this button here. So if you want to turn your strategy off, you can click it here, and then you're going to see a sad face indicating that the strategy is not currently functioning. Okay, and then to remove the strategy, we can go to Expert Advisors, Properties, and remove it there like that. So next up, let's pull up the strategy tester and do a demonstration of how that works. Okay, so here we can see the strategy tester in the lower part of the screen here, And it's here that you can select the strategy that you want to test. So here's all the strategies I have loaded, and here's the one that I want to test. Then you choose the symbol that you want to, or the currency pair that you want to test it on. So let's start out by testing this one on the euro against the dollar. We're going to want to test it on the H1 time frame. That was the recommended time frame to test it on. Model, this refers to how the test is conducted, and here this is the one that you want to choose every tick. This is the most precise method, so let's stick with this one for now, keep it simple. And then you've got to put in the date. We're going to test it from for the prior month, so we're looking from the 1st of September to the end of September, the 30th, and we're just going to use the current spread. And so we got all those parameters in there now, so let's start the test. Okay, so let's take a look at the results here. We can see that this is what it did. We can see the first trade there was a loss of $51. Second trade there was a profit of 102. You can see how the balance is changing here, and then the third trade there was a loss of 51. You can see a graph here with how your account balance is changing. So we can see with the first trade there was a loss, the second trade it made it all back and then some, and then the third trade it lost some. And this is probably the most important pane to look at, and the most important figure here to look at is the total net profit here. So we can see that basically the strategy broke even. It's down by a little less than $1 on a $10,000 account. And here we can see all these different interesting data points: maximal drawdown, percentage of winning and losing trades, and so forth. So let's go back to the settings here and try it on a different currency pair. Let's try it on the pound this time. Okay, we can see in this case there were more trades. A loser, a winner, then another winner. We can see that the winners are bigger than the losers. Let's take a look at the equity curve. So small loser, a couple of big winners, pretty big loser, and then a winner again. But it looks like we're net positive with this strategy over the data period that we chose, which was the month of September. Okay, so we can see that the total net profit is $70 on this one. Not a great deal of trades in this strategy. But we can see that the profitable trades made more than the losing trades lost. So I think it's a good example that even if you have a 50% winning rate, which we can see here, you can see that because the take profit was bigger than the stop loss, the strategy ended up being profitable in the end. So there it is. The London breakout strategy EA performed profitably over the month of September. You can see there was not a great deal of trades, only 6 total trades, but ended up being profitable on our 10,000 demo account. So with that, guys, I'm going to wrap it up. A couple of things that I wanted to emphasize before closing out today, though. First of all, regarding paid expert advisors on the internet, my advice would be to steer clear of those, or the majority of those, because many of them, in the majority of them, in my experience, are not good. My advice would be to start with free expert advisors and test them on demo accounts because there's a lot of people promising riches with expensive EAs that don't work. The other thing I'd like to emphasize is just, all the positive things about automated trading. Freeing you up from the screen. I mean, potentially you could be working a job and get quite into trading because you're not tied to the screen all the time. You can have your EAs working for you while you're asleep, while you're at work, and then of course it takes out a lot of the risk. It's only a secondary form of income. So if you're into getting into trading seriously, and it's more than just a bit of fun or a bit of a gamble, I would definitely recommend taking a serious study of automated trading, back testing, and ultimately developing your own strategies and expert advisors and using those, because I think honestly that's one of the greatest potential avenues towards success that you're going to have. So with that, I'm going to wrap it up. It was a very sort of brief overview. We can get more into other topics in future sessions. Perhaps we can get into like how to move to a virtual private server, all that kind of thing, in more depth. But until then, I want to thank everyone for coming. If you have any questions, shoot them over to me at webinar@OctaFX, and wishing you the best of trading in the meantime. Thanks again for joining us.